If I can extend beyond the decks just for a brief second, and I don't know, this stems from Andersino asked a question about the TC node, which is kind of a side thing because it's infrastructure and revenue generation. But if we stick in the financial arena, you LeoDex is a DEX, but what about a financial network or what about financial products? Have you thought about that? And what can you build on top of LeoDex potentially, and maybe what would be a time frame, a year, 18 months, 2 years, to build things such as lending, to build things such as bonding, to build other types of financial services on top of LeoDex now that you can tap into different pools and different um, swaps and different types of currencies. Have you thought anything about that and going into let's call it Leo Financial Network instead of just LeoDex by adding some of these financial services that people use, maybe collateralized lending and whatnot, to really expand the ecosystem and, of course, to generate fees?
Yeah, I think, at the pro, and this has been something that we've, gotten ourselves into a little bit of trouble with, is that we're always kind of ahead of the curve in terms of the base blockchain that we're building on. We're trying to build technologies where there's no infrastructure in place. And that's kind of proven the skill set of our team, is that we're able to take something that literally does not exist and create, on top of that. And what I think our focus should be with LeoDex, especially right now, as we're just kind of in the early days of scaling up, is taking what is already out there in this cross-chain space and making a really simplified, and fun to use user experience for those existing features. So swapping is the core product right now, and other products are being rolled out. Like, I know that. Chainflip and Thorchain are both working on perps, which is perpetual futures, which is a huge product for centralized exchanges and literally does not really exist in the DEX space, at least not at scale. So these protocols are already working on this. All we need to do is sit back, let the protocols build these core features, and then we build the interface that is the best interface for using those products. So I actually think we're in a much better position here where instead of us having to innovate both the back end and the front end, we're able to focus on building the best front end we can and then let the back end get built by the protocol itself.
Good explanation. Khan asked, which is a good question about the tokenomics. If you go and you see some of the swap volume on LeoDex, it is raising some money in fees. How will LeoDex fee structure evolve to optimize earnings for buying Leo, and what impact might that have on hitting the tokenomics goal? Maybe if you want to quickly explain what happens to these fees and what happens to the money and how that supports Leo tokenomics.
Yeah, so the current fee structure is that the revenue earned by LeoDex's affiliate, which right now is only Maya, but in V3 it's going to be Maya, Thorchain, Chainflip, and Rango, um, buys the Leo token off the open market and then permapools it in the Leo Cacao pool. Uh, I have some interesting thoughts on the future of Leo tokenomics as LeoDex scales up. So right now we really need to focus on consistent volumes for LeoDex. So we have had some good volume days, but we need to focus on getting consistent, high volume days and turn that into high volume months. From month to month to month, we should get focus on can we create a steadily increasing average monthly trading volume on LeoDex. And as we continue to do that, then I think the Leo tokenomics will evolve pretty dramatically. Um, if you look at it with $1 million per month in swap volume, which is not very much, we're generating, or I guess just take it to a more round number. If you look at like $4 million a month in LeoDex swap volume, we're looking at about $20,000 in affiliate fee revenue that comes to LeoDex. So that would be $20,000 in buying pressure on the Leo token, which is at the current price a very large amount of Leo. So yeah, I think you can kind of you can kind of game that out. But again, the real lead domino, we don't need to worry about that right now, because the real lead domino is we need to get consistent volume. So we need to get LeoDex V3 rolled out. We need to get people using it, and we need that consistent volume to grow, because one-time buys or whatever is not going to do anything. But if we can get consistent volume every single month that's also increasing, that's what's going to have a dramatic impact on the Leo price.
Now, is this buying Leo and putting in the liquidity pool, or is this buy and burn?
This is the way it's structured now, is buy and deploy liquidity. I think at some point it may be good to revisit that and consider, possibly a buy and burn or a buy and more distribute model. But that's going to be something that needs to get voted by Leo stakeholders.
Yeah, there really is a lot of ways you can go with that in terms of the tokenomics. Once they start floating in and buying the Leo token,
Right.
uh, you may find the exact opposite, where everybody wants a burn, but because people want more tokens because they believe in the future, it's just like stocks, where stock splits get everybody excited, whereas reverse stock splits usually are the sign of a declining company. And so, the crypto mindset is less tokens is better, but history in the stock market says companies that are growing, that are doubling their stocks for a 2-to-1 stock split, markets go crazy because people know the future is brighter. And now I got twice as much as I had before, or 50% more than I had before, whatever the number is. So, if you could take some of that and start distributing to the community who is involved, that's a great way to incentivize even more activity and get people more excited about the future.
Yeah, I agree. And again, I think, you outlined a good point, which is that the lead domino is getting that volume in and growing it and having it be consistent. And then from there, I don't think it's good to be completely rigid. And I think that that's, your kind of broader point, is that a lot of people in crypto are very rigid about, like, every single dollar that's generated needs to buy and burn the token. And I think that having rigid economics is a problem, not only in crypto, but even if you look at, broader economies like the Fed, for example. Like, being too rigid in how you do things, and being too slow to move, is actually creating economic problems. So, you really do need to look at Leo as its own little economy. And right now we have a revenue problem. So generating, fee revenue from LeoDex V3 is going to solve the revenue problem. And then it creates a new, problem, if you want to call it, or something that needs to be considered is, as more Leo gets bought, is where is the best place to deploy it at various times. And I think that economic conditions will change that. So, right now it might make the most sense to buy Leo and deploy it in the Leo cacao pool. But once you have $1 million in that pool, does it make more sense to then start buying Leo and burning it? And then once you've burned $1 million worth of Leo, does it then make sense to switch back to buying and deploying the liquidity pool? And I think that that's going to have various economic indicators in terms of what's best at the right time. So I think that a potential future for Leo tokenomics is where the Leo DAO would vote on what to do with revenue in real time. So the use of revenue could change dramatically from day to day or month to month. And perhaps we make that like a monthly thing. So like, or even quarterly. So every quarter, what happens with the Leo, the revenue generated by affiliate on LeoDex, it is different than the month before. So, let's say that current economic indicators say that we should buy and burn Leo. Then the Leo stakeholders vote to buy and burn 100% of the revenue through the Leo token. And then let's say that the next quarter, everyone's looked at the economic indicators, and then the community decides, hey, I think it's best to actually buy and deploy liquidity into the Leo cacao pool. So then 100% of the revenue for that quarter will buy and deploy liquidity in the Leo cacao pool. And then as those indicators shift, it can continuously shift in different directions. And I think that good economic indicators can be created around, how that should change and how people should vote. And obviously the Leo stakeholders, having a stake weighted vote on this, the stakeholders are going to vote for whatever is most beneficial to the Leo token itself.